Okay, welcome MegaWhale team to another video. In today's video, we're going to be talking about the bear market, and we're going to be giving you a updated prediction for our bear market target. The reason I say updated is because our target is that 200-week moving average on that weekly chart. But the recent price action for Bitcoin has been quite explosive. It's dropped down very quickly, and we've come a little bit closer to that 200-week moving average a little faster than expected. So thus, we will probably reach that 200-week moving average a little sooner than expected. So we just need to change our ranges just a very small amount to update you guys and keep you guys up to date with the most accurate possible prediction for the bottom of the bear market. So we'll get straight into it, but first and foremost, if you are confused and if you've missed anything, go back and watch this video here. I got it up on screen, a Bitcoin huge crash imminent video. We talked a little bit about our method and how we actually predicted it in this video. We also told you guys that a huge sell-off, huge sell-off was coming once we lost that 44 RSI on this weekly chart. And in fact, we have seen that huge sell-off incoming. We saw I think from that $46,000 range, we saw a significant drop. I think it was probably around 20%, even maybe even a bit more, 46,000 to 35, 25%. So pretty significant sell-off. And we're going to go from this chart today on the Brave New Coin Liquid Index and talk about where we see the price going. So we'll get straight into it. Let's just get rid of this. So what we're going to do, we're going to use the same method as we did last time, assuming the bottom will be on this 200 moving average somewhere. The question is, where will the 200-day moving average actually be going forward, like 100 days? So what we do to figure that out is we take a length and width ratio. So we're going to say from here until July the 4th, right? We'll take our same date until July 11th, which is 170 days. What we'll do real quickly is it's going to put a vertical line just to basically indicate where our two data points are, our starting data point and our ending data point. We're going to drag this one across and we're going to place it just on top here and then dragging it, of course, down to the start. All right, we have our length ratio, which is still 170 days. Let's just chuck it in about 169. You can't get it exactly because it's a weekly chart. 170 days, and we're going to take our vertical analysis, which is the height, which is going to be 34 days, 34%. All right, the percentage doesn't matter. It's more about the actual height. So what we do, we input this on top over here. All right, just put it on perfectly, and then we're going to take that 200-week moving average and draw it across. All right, we'll change it to yellow in a second, and we're going to be assuming that that 200-week moving average will be continuing at that trajectory. What can happen as well, because we do see that 50 SMA converging downwards. Now the 50 SMA converging downwards won't affect the 200 too much, but we can see a little bit of a taper down, or a little bit of tapering at that last half. Over here we can see a little bit of tapering. That's definitely possible, but that's not really going to affect our prediction as much. It's not really going to change it, so we're not going to factor that into this equation and factor that into this analysis for now. We're just going to change that to yellow so it looks more even. Perfect. So we would expect the price to come on down and touch this at some point. Either we bounce and then continue downwards, or we just flash crash it and zigzag it all the way down here, touching. So right now, our prediction for that bear market bottom will be anywhere between, we're going to say from the 14th of February, so $20,000 to $26,000. Our previous prediction was about $24,000 to $26,000. So all we've done is we've taken about $2,000 off the bottom end of our prediction. About $22,000 to $26,000 is our new prediction for Bitcoin's bottom. All right, we're going to quickly run you through what we think can happen in that meantime. The possibility of a bounce here, definitely possible. We could also see something along the lines of this, where we find support and bounce out of this descending wedge. Of course, the descending wedge is a bullish pattern. We do see a move upwards. We can take a measured move from the top of the wedge to that bottom point at first touch and apply it to see our breakout. So we do have a pretty strong breakout possible on Bitcoin here. If this wedge does break, we have to keep that in mind. But what I would expect to see is a push upwards into the support and resistance box, and a continuation dropping us down to that $22,000 to $26,000 range. From here, we'll push sideways and continue upwards. So going back to this chart here, we can see how that would be bringing us down to that 200 moving average, touching that 200 maybe moving average and moving up. There's one thing I want to talk about today, guys, and that is usually in crypto, the majority is always wrong. We've seen it happen every single time we top out is when we have the most euphoria in the market, when the majority of people are completely overexposed to the market, expecting ridiculous high prices. Over here, everyone expected Dogecoin to go to $1. Obviously, the market crashed. Over here, everyone expected Bitcoin to go 100,000, 120,000, 200,000. Well, I heard some ridiculous predictions, and obviously everyone was wrong. The market crashed. The majority was always wrong, and the biased are always late. Right? The biased are the crypto influencers out there who don't know what they're doing, who are telling you guys, who are actually leading the lies of these $100,000 predictions or $200,000 predictions. They will adjust their predictions, and they'll be late to predicting the correct thing. Meanwhile, people like myself and other technical analysts, like Wolves of Crypto, who stick to our words, stick to our analysis, and actually look at the charts and read the charts, and tell you guys what the charts actually say. We are usually the ones who are correct. Now, what is happening in the crypto space at the moment? The majority of people are expecting us to continue to fall down. And this is the only reason why I'm expecting some sort of relief rally pretty soon. And I do think February will be the month of a relief rally. February is historically a bullish month in crypto. We usually have a large amount of upside in crypto in February. So what I'm going to do is I'm just going to bring up, let me just bring up this over here. I think you guys can see this now. This is our monthly Bitcoin results. All right, we can see February is generally quite a green month. January is very, very red. March is very, very red. So going off this alone and taking into consideration the state of the market and more or less the opinions of the majority in the market at the moment, we can assume that because everyone is still bearish and they expect lower prices right now after we've had a significant drop, all right, 20% drop, it's unlikely we're just going to see another 20% drop right after to take us to our target. What's more likely is we push sideways, maybe drop a little bit more, and then have a relief rally in February when we historically have a great month. This will trap a lot of people in the market. Everyone will get FOMO again. Everyone will get bullish again. People won't understand how macro cycles work. They're going to enter the market again, only for it to dump on them again, and they get wrecked once again. All right, this is going to be ultimate pain for a lot of people. This would be the ideal scenario to shake out all the weak hands. We don't just drop in a straight line. That is too easy. Unfortunately, it is too easy to drop in a straight line. It doesn't happen. It can happen, but it's unlikely. What is more likely is we have some sort of relief rally to trap more people in the market, and then the market will crash. Those people will be trapped, down a lot of money, altcoins will get wrecked, and then we'll bottom out. All right, so that is what I think can definitely happen. Of course, this is just that one short-term scenario. What holds the stand of test of time, meaning if this doesn't work out, it doesn't really matter too much. I don't really care. What I think matters the most is if we come and touch this. I don't care how we do it. I don't care if we zigzag up and then crash down. I don't care if we just go down. I don't care if we go sideways and then crash. It doesn't matter how it happens. I think you need to keep that in mind when you take a look at this shorter term analysis I've shown you. Although this is a possibility, the journey really isn't that important right now. What is important is the destination. And the destination is our original target of that 200-week moving average, and to come and touch that and bounce there, potentially wicking below as a nice little fake out and pushing back upwards, and then obviously moving into an uptrend again for the rest of the year. Remember guys, if you've got any questions, like, comment, and subscribe. Our links to our Twitter and our Telegram are in the bio below, and we'd love to see you in the next video.